Morning, everybody. 11th of June. We are Signal Centre Talking Ball. Joe Neighbour, Ian Coleman, and Steve O'Hare. Morning, guys.
Morning
Good
all.
morning.
All fun and games this morning, by the looks of things.
Yeah,
Yeah,
bit of an
it's
overnight frenzy.
Um,
yeah,
so, just to sort of recap, that was on the back of the FOMC meeting that seemed to trigger the most of the volatility.
yeah.
They didn't change their stance on interest rates, which I think was pretty much expected. But there was no, and also they're going to continue to buy bonds, as we know. But there was nothing else really.
Till
Um,
2022.
that's
It's
when they're
another
going to
two
keep
years.
underpinning the
Mm.
market, are they?
Yeah.
Have to wait till then to
To
sell
sell
the
it.
market. You know.
So, bit of lacking on the old guidance front and poor economic assessments highlighting the tough road ahead for economies globally. So that has fed through today into equities and overnight in the Asian markets, and we are selling off quite aggressively. And in our morning analysis this morning, I think all of us were spotting lots of head and shoulders patterns that have formed and completed on some of the short-term charts. Don't know if any of you have got any examples that you can throw up quickly for us to have a look at.
Yeah, I mean the best one, I suppose, is the FTSE one that we were talking about yesterday. And so if we go back to what was yesterday, the 10th. This is where we were yesterday. This time, 24 hours ago, we were here. And this is what I did it. Think I did it on under the head, and I was looking for this slight right shoulder. And really, this morning I'm looking for this throwback to the neckline. So this is probably the best one example we can give. We can drag that, so you can see the volume's dropping, and then you see the big spike in volume when it breaks the
Nice.
neckline, and
Textbook.
then yeah. So
Yeah.
I mean that really worked really well because it was quite horizontal as well. It looks a bit neater. Yeah, so I'm sort of hoping really to get this little squeeze back higher, and then sell into this right shoulder. That would
Like
be,
that.
but mind you, it's sort of quite close to the measured move target anyway now.
It's
So
not far away, is it?
no,
Then you'd be looking
um,
for extensions to that, I guess, to 61.8.
yeah,
There's a few
um,
commodity currencies that are sort of highlighting, well, haven't built head and shoulders formations yet, but sort of highlighting the potential for sort of rallies or dips to be sold or bought into. So this
yeah,
one, Aussie dollar. So you've got previous support here, and you can just see this dip buying this morning. So is it going to go up and form a right shoulder? And then if you go to dollar CAD, which is we caught this one quite nicely yesterday over the FOMC. And then is this going to form a reverse head and shoulders? And then New Zealand dollar is pretty similar to Aussie dollar, obviously. Are we going to go up? So I don't know if we might get a bit of a correction to get into it again.
I was looking at similar
Potentially.
things. So I've got some of the Aussie currencies that are potentially forming head and shoulders tops. That's Aussie CAD. Sort of hit that right shoulder up there at 94.09, but obviously needs to break down below 92.93 to complete that. Um, Aussie Swiss, that looks like it's heading lower. Aussie Yen, that's had a nice break of the head and shoulders there as well.
Yeah.
yeah,
Looking to sell a rally on that. I mean, I'm looking for a fairly extreme sort of pullback. I'm not going by the textbook sell the neckline just because I think markets are just too choppy at the minute. And I think if you're looking to sort of sell on more extreme moves where people are going to be trying to sell here, they're going to have their stops up here. I'm trying to get in at that point when they're getting stopped out trying to play these head and shoulders rather than actually doing it in the sort of textbook sense of selling the neckline. So
yeah. It's a bit more of a conservative approach, I suppose, isn't it? But trying to play that exhaustion of, or playing the market mentality a little bit.
yeah, so I noticed that on some of the Aussie stuff, as you guys have also spotted as well. Euro, New Zealand dollar had potentially an inverse head and shoulder that's formed there, and that's sort of racing away. So yeah, some interesting bits.
Yeah.
Just
What
going
about
back to the FTSE, Steve, just
yeah,
while it's on my mind, just wanted to highlight the daily chart on that. We've obviously seen a massive correction towards the 61.8% of the crash move.
yeah,
We've got this big outside candle, or engulfing that posted on Monday, and now we've seen a break of this sort of short-term wedge. So or ending wedge, which now
Yeah.
could trigger this further correction lower. So I think it is a case of selling rallies. Although you've said obviously we're coming close to the target of the head and shoulders on the intraday chart, I think there'll be more opportunities potentially over the sort of swing period of sort of more short to medium term.
Yeah, I mean, even on that FTSE, a close below 60.90 would signal a bearish outside candle on the weekly chart.
Okay, that's interesting.
Yeah.
Look at that.
So
Yeah.
it sort of like took out the high the previous week, and then 60.90 was last week's. Yeah, 60.90 was last week's low. So I closed below there on Friday, and that's pretty damn negative for as a sort of bearish outside candle. They're pretty
That'd be
decent
powerful,
candles.
wouldn't it?
Pretty solid. Yeah.
VIX is like spiked up a little bit overnight.
You've got the chart.
Yeah, just see the spike higher from here, sort of like all. Okay, we had a bit of a rally, bit of a shooting star candle there, and then all of a sudden, bang! We've sort of like thrown it back into this level of sort of resistance, really around about the 30 area. So let's see if we get the follow through on the volatility. There's a chance that volatility may just be around for 24 hours and then stall. So we've got to be a little bit
decent gap there, isn't there?
Yeah,
a lumpy old gap.
Yeah, but then you sort of see it's sort of that 30% level or 30 level seems to be a sort of a pivot type thing. So pick up in volatility, and we could be in it for the long run. But if it sort of like just is around for 24 hours and then we sort of like stop again, there's a good chance that we may get the market steady, the ship be steadied again.
Well, we can't rule that out because that's been pretty much the theme for the last couple of weeks, hasn't it? Any sort of hint of selling or increasing in bearish sort of momentum, and it just gets bought up again.
Yeah, we all get excited, don't we? We sort of think, oh, here comes the second wave.
Yeah.
I was going to say a little bit like COVID, but it's not really something that we get excited about. But yeah, it's you could think about these FTSE levels as well. You get into that level between the 50 and the 38.2, where you've had this price action before, where you've had a decent battle, and basically the bulls are still in front, although it feels like they've had a bit of a kick in over the last 24 hours. There's support below, so be aware of that.
The US as well we need to keep an eye on, and this is the S&P 500. So there is some decent resistance around here. We've got 78.6. We've got a previous low that goes back to the 31st of January, and we've got an 88.6 just above that. All of which seems to have curbed the buying interest for now. Potential there that we've got a bit of a break of the short-term trend.
Yeah.
Which could, following that parabolic move higher, could mean a decent unwinding of that move. But as we know, the US guys are super bullish and love buying dips. So we're
talking about second waves. A lot of the US states that have reopened earlier getting second waves of infections, aren't they?
I think I saw something about Iran having a second wave.
Yeah.
The first one to.
India's been horrendous, hasn't it?
I mean, we won't know the full fallout of that, Will, because I don't think they'll be doing as much testing to sort of give you an idea of how much of how bad it would actually be. But I can't imagine it's great over there. Any country where there's big poor areas, I think. Okay, so anything else on the old headlines that we need to be aware of, or anything you guys have seen on the charts that you like?
No, nothing else. Just interested in gun to the head. What sort of what I managed to nail yesterday?
How that went yesterday. Okay. Well, you and I both had a go at selling equities, so based on what the conversation we've just had, that worked out quite nicely for both of us. We had FTSE there, which you sold at 6374 to make 2.48R. You had a big old target on that, didn't you? I think it was that 8R you were looking for on that.
It was something quite elevated. I think it was 6 or something. Might have been 8.
Held on to that.
Smash those then.
Through to morning, that would have been quite nice. DAX actually hit target at 12,465, making 2.71R on the day.
Well done.
And
CAD Swiss blown out.
on
Yeah.
CAD Swiss. So overall, that's a nice little tick up in the P&L. Puts us back over the 2,000 mark. Starting point from £1,000 back on 31st of October.
Jokes run away with the R now.
It's amazing, isn't it? So we were close together there, and then boom, it's like a 12-hour difference between us. It's how quickly these things can turn.
Yeah, remember that, me coming up on the rails.
Yeah, yours is still
in orange.
a nice steady, going in a nice steady direction. And I see you've worn an orange shirt to. Yeah, love it. Maybe we should all wear colours. I'll wear blue tomorrow.
Yeah, but you actually, to be fair, you've had 4 extra days than us.
Yeah. Okay, I'll sit out 4 days if you want.
You have to take it to the extreme.
I can't remember having 4 days off.
It's funny, isn't it? Yeah, I'm sure he's taken a few. Them 4 days are probably a couple of winners for us.
Probably took a few extras.
Right. Anyway, has anyone got a trade? Because I need to look for one while you're telling people about it.
I'm struggling, so I'm looking at euro sterling, and I've drawn a nice little pattern on here. And it's just this doji that I quite like this morning. I talked about this a couple of days ago. The fact that we've got support located here, which is 80. Where is it now? The exact level 88.34. And whether or not this was going to be a dip lower to sort of form the B wave, if you like, so AB, BC, CD to the upside, and this just inside choppy wave.
Yeah.
And then going to this one, remember we said the 61.8% pullback. It's hit the 50, but it's not looking impulsive. I think it might draw back to this 61.8% fib, and then going into this intraday chart. Normally, when you hit 50. If it is going to form a bearish Gartley, it will go 50 and then it will try to get to 78.6% is the exact Gartley, but I'm going to have to take it short here. And you focus on 127.2% of the whole move, which is basically where this support is. So I think, I hope that this will work out. I have to put my stop above there, a little bit above there. So 88.61, targeting 88.35, stop at 89.82 for 6R because I need it, 5.87.
Okay, cool. Steve, have you got anything?
No, I haven't. You go first. I was actually going to do euro sterling, and I was actually going to go with completely opposite to Ian, but on a really shorter time frame. I was just going to go for the move up to that 78.6. So just seeing that play out. I don't know. If you were going to go long for the shorter term move upwards to finish off the pattern, then I was going to go the same way, but have a really tiny stop. So we could both win. But I could sort of like win 10R and you could win 5R or whatever you want. So I'll move on to something else. I'll get something else.
Have we got any sterling figures today?
We've got James is the big number out today at 130.
Anything to push it along? Yeah, nothing else, is there?
Anyway, this is my trade for the day. I'm going to buy sterling New Zealand. Just looking at the charts, flipping through, there is a bit of a bottom pattern forming there, I think. So let's just try and draw that on. We've got, first of all, just highlight the fact that there's this big sort of rounding bottom taking shape. And then if we try and fashion some sort of head and shoulders from this, down at the lows there. So it is upward sloping in nature, which are generally more bullish if they play out. It's not completed yet. It needs to get above 95.86, but I'm going to take a speculative trade on that now. Buying here at 95.47. Going to place a nice tight stop. Well, I thought it was tight, but it's quite pippy, this one, isn't it? Moves about a bit. 94.88.
Quite pippy.
Pippy, like that. I'm going to go for a target just there.
I like that. Sterling strength.
Also, New Zealand dollar weakness, because that's been, pretty strong overall, but I think that's probably due a correction at some point, and that will be a risk-off move as well if New Zealand dollar starts selling off, which is in line with where I think we are headed. So, buying sterling New Zealand dollar 95.48, stop 94.88, target 96.88.
Going to be in it to win it.
You do indeed. Steve?
Yeah, that give me a chance to have a look at Euro Yen. Now, talking about head and shoulders, I'll show you this, but there's an evening star formation that posted a few days ago. That's on the daily chart. And in Euro Yen, on the intraday chart, I'm looking to sell a rally, but we're right on this neckline. So maybe this is the one that I didn't want to mention earlier because I knew one of you would jump on it. We'll get short here and preempt the break. So 121.48 we're selling. And the measured move target for that, this is selling Euro Yen, is 118.20. I don't think we'll get anywhere near that on a day.
But you have to be in it to win it.
Yeah, let's go for it. Let's go for it. And this means I could do a bit of a better stop, but let me be a bit aggressive with it. I'm going to put the stop above the 3 o'clock this morning high, which is, let's round it up to 121.98, and we're targeting 28. What does that give us? 6.4R. So selling at 121.48, stop at 121.98. So you've got a 50 tick stop and targeting 118.28. As I say, I don't think that'll happen by the end of the day, but I'd like to see if we get the break of this neckline, there should be a bit of follow through on the downside.
Excellent. Good luck.
Cheers, and you.
Anything else to point out today? Obviously, we just mentioned jobless claims are out at 130 today. They're expected to fall to 1.5 million from 1.88 million. There has been quite a bit of divergence between what's expected and what's actually been happening on these numbers of late, so that could go any way.
Yeah.
Anything else due out today, or anything else on the news-wise that's interesting at the minute?
No, well, pretty much. That's it.
Okay.
I think that's it.
So expecting more volatility, I think, is the
or not.
takeaway.
That's what we're saying. 30% is, or 30 number is the VIX sort of resistance. So maybe we won't.
Okay, maybe we won't. Who knows?
Yeah, who knows?
Okay, well, let's wrap it up there then. Nice and short. Let's
short.
catch up
17
tomorrow.
minutes, mate. That's average.
Normally we're over 20 minutes, so that's
yeah.
Oh, so better waffle for 3 minutes.
We haven't been talking about the pubs opening or anything like that, have we? So
no. Are you across that news?
No, it's not. It's not opening, is it?
No, I can tell by the look in your face. Look, you destroyed.
It's funny. I saw a tweet yesterday where they had like thousands of people on the beach, thousands of people protesting, and thousands of people doing something else, and then someone sitting in the pub on their own, and they said the first 3 things: this is okay, and the pub can kill you. And it's sort of like saying what is going on with the world. So it was quite funny. It did make me chuckle.
Lovely. Okay. Have a good day, gents.
All right,
enjoy.
Catch you all tomorrow.
Yep. Cheers.
Bye.
Bye.